Joining our closing bell exchange today, Ernesto Ramos from BMO Global Asset Management, Jonathan Corpina from Meridian Equity Partners, and Rick Santelli at the CME in Chicago. Jonathan, I'll start with you. I mean, going into the close today, I guess we're going to expect pickup in volume and volatility given end of the month, quarter and half.
Absolutely, and it's a day that we've all been waiting for. We've got through the S&P reweight, we got through the Russell reweight, and this is the third date in June that we expect a lot more volume, a lot more volatility. I think depending on the activity that we've already seen in previous sessions, a lot of this has been priced in already. Might see or we'll continue to see some window dressing as we get towards the end of the day.
And what's been a pretty struggling couple of weeks with various negative headlines and market declines, is it important today that we do end roughly where we are, up 200 points or so on the Dow?
I think so. I think the volatility that we've seen back and forth has added a lot of 1% moves to our markets, and investors haven't been used to that. Ending up in the green today, getting the Dow back positive for the year, getting those financials to stop their downturn would be very important. And understand we're going into a vacation, a holiday mode next week, right? Shortened trading sessions. So volatility is going to pick up. Volume will certainly drop dramatically.
Ernesto, did anything fundamentally change over the last two sessions, which has led to the better tone and the big rally that we've seen versus earlier in the week where there was a lot of fear-mongering about trade and hand-wringing about trade? Or is this just sort of end of quarter, end of half-year stuff?
Yeah, I don't think anything fundamentally has changed, to be honest with you, in the last couple of days. We're still going to see elevated levels of volatility through the rest of the year due to the rhetoric around trade and so on. But I think the key here will be to focus on the earnings reports coming out of the second quarter, and more importantly, the calls and the outlook that companies give, because the expectations are very high, 30% for 18 year over year relative to 17 and 10% for 19. And if we somehow don't get a call that is consistent with those high expectations, I think the market could be in for a bit of a headwind in terms of price action.
Rick, I didn't know what to start with you today. A big jump for the likes of the euro and the pound against the dollar, or the fact that the yield curve is at its flattest since, I believe, August 2007. Two quite stark moves today.
Yeah. You know, the yield curve is a big popular discussion. I'm not sure that we can derive a lot of meaning from it because of all the management that's been used to control interest rates for the last 8 or 9 years. As for the dollar, this is a really interesting scenario, Wilf, because the euro makes up about 57% of the dollar index. But yet today, the dollar index, even though it was down 0.75 cents, actually closed up a little bit on the week. And the euro closed up a little bit on the week. As far as all the other dynamics, all I can tell you is a small story that traders in the equity complex here had a plan coming in on Monday. They said it would be nasty. Monday, Tuesday, and Wednesday, they wanted to buy based on effects from month end, quarter end, half year end. They thought they'd be buying on Thursday and Friday. Maybe they just got lucky. But as you talk to traders, they really do have very significant strategies for how to deal with some of these rebalancings, and they're pretty good at it. I don't think the market fundamentals have changed a lot in the equity markets. There's some headwinds, but I think they'll blow over. But I really do think on the interest rate complex, we really need to pay close attention. The rest of the world is coming into an issue that's going to keep their rates softer than ours, and that pressures us down. So the real issue is, can we break away from the notion of a softening rest of the world and get divergence here? I think that's the topic to concentrate on for the next quarter.
Yeah, and whether Rick's talking about rates or, Jonathan, the economy. I mean, the whole story was global synchronized economic recovery. That doesn't look like it's happening anymore.
It's not, and it sounds like a heavy lift to really have a major impact on what we're looking to do. And as Ernesto said before, I agree. Earnings season that's coming up in 2 weeks, it's going to be very important to hear what companies have to say, what the outlook is moving forward. The bar is set high.
Ernesto, very quickly, you own Bank of America. Was the stress test yesterday a turning point for the sector?
I hope so. We own Bank of America, Wells Fargo, and Citi, and we think that's the story there is obviously capital devolution to the shareholders, and we see that continuing as the financial regulation and the impact of the stress test starts to sink into the prices.
Okay, great stuff. We'll leave it there, gentlemen. Thank you all for joining us. Ernesto Ramos, Jonathan Corpina, and Rick Santelli.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.